And then you can add it to your favorites. You'll probably have to make a favorite list. And then you will also add this one. I just do just because viewers really like it. We toss in Bitcoin, of course, you know, because it does affect many. It affects all cryptos. You know, it's the anchor. I don't want to confuse you guys, so here we go. Now, say you've done this. Now you're going to download a trading account you're going to download a trader app and create a real trading account. So you're just going to go into your Play Store, and we are going to use a ForeTrade trading account. It's right there, ForeTrade Pro. Download that, create a real trading account. And for those who want to go that extra mile and are just doing this strictly out of interest and not doing my subscription based, I recommend you make a paper trading account, because paper trading is strictly for training. It's phony money. You know, it's all the same schematics. It's all in the same real time. However, there's no real loss. There's no real money at stake. But for everyone else, you're going to make a real trading account. Okay, so say you have done this. Say you've downloaded a ForeTrading account. You added my recommended starting amount is around $1,000. Doesn't have to be. You can start with 500, but it's going to be a slower pace in a longer game. If you start with at least $1,000 to $1,300 or up, I recommend it, because you'll have greater yield, and I'll show you why later. Okay, let's dive in. Now, just like in the TradingView app, I favorited gold in USD currency. I favorited oil in USD currency. Now, cryptocurrencies aren't on ForeTrade, but that's okay. We can download a different trader, and I'll dive into this later for when it comes to cryptocurrencies and the dangers that come with it, etc. Okay, so right now in real time, gold is fluctuating. It's sitting at a price of 23.27, right? Now, for beginners, you're probably confused of what you're looking at. What am I looking at, Julian? I don't even know what I'm looking at. Okay, well, let's dive in. Okay, so all these green lines, green lines, red lines, these are called candlesticks. Now, what is a candlestick? A candlestick is simply just selling and buying pressure from everyone in the world, whoever's trading and whoever's buying or selling this stock. If a candlestick is green, that means buying pressure has overwhelmed selling pressure. If a candlestick is red, it means selling pressure has overwhelmed buying pressure. And it's just showing in the time frame of whatever we've set it to. So right now it's at 15 minutes. That means one candlestick, so let's say this green one, this little red one, this whatever, each one is a 15-minute segment of price action. Now, in each trader, we can also set it to different times. So now each candlestick is at a 1 hour segment. And the times that we are going to mostly use are 4 hour, 1 hour, 15-minute, and 5-minute. However, my personal favorite is 30 minutes. I'll explain it in another video. It's just preference, guys. Don't worry about it. Now, you might be thinking to yourself, okay, but why did we choose that trading or that trader? Why did we choose ForeTrade? It only has 3 stars. In all honesty, guys, it's not a great trader. But there is one reason why it's essential for us. Now, in Canada, there's many little bylaws and statutes that make it very difficult for traders to let people trade. Now, what ForeTrade is strictly margin trading. Now, what is that? Margin trading is leveraging your money. It's so the trader can lend you money all within an instant to allow you more trading capability for whatever stock you're selling or buying at the time. Okay, here's a quick example. I have $100. There's a stock called phone stock. Phone stock is $100. I buy that stock. I buy one share of it, one stock. That phone stock goes up because China blew up or anything happened. Something happened and it causes the geopolitics, it causes phone stock to go up $10. I've made $10, right? I closed my position. I've made $10 on top of my $100, making $110, right? Now, what margin trading is, instead of me just making that $10, that trader is going to lend me money against my $100, leveraging it. So let's say I had 10 times leverage. Now I have $1,000. I have $1,000 of buying capability that I'm going to buy a phone stock. And say I did do that and it went up $10. Now I've profited $100. Now what the broker does, they do make a small commission off every trade, and I'm sure it adds up. Now that brokerage, now you've made that, instead of just $10, you've now made $100 because you've leveraged that $100 initially 10 times. So overall, 10% off $1,000 is better than 10% off your $100, right? Okay, stay with me. Now we are going to dive into a couple other things. So there's a common misconception of, oh, I want to learn about investing. I want to learn about this. Okay. I am not going to teach you investing because that is not the correct terminology. I'm going to teach you swing trading and day trading and scalping. What investing is, the only difference is, investing is I buy, let's use the same example, I buy the phone stock and I leave it. I leave it to just accumulate over time. Even if it goes up, if it goes down, doesn't matter, I wait. I'm just waiting and I don't do anything with it. If I'm holding it longer than 6 months or 3 months, then I'm an investor. What day trading and swing trading is that I am buying that stock and I'm going to sell it, buy it, and close my positions all within a couple days or within a day or sometimes within hours. That is the difference. I'm going to teach you how to trade within those, within short periods of time. Okay, now I've shown you where, I've shown you what. Maybe it's still not landing. Maybe the information still isn't landing. That's okay. I will guide you through every single step. So let's do it. Even if it loses me a couple bucks, I will do it just for this. Okay, so let's say you started. You're in my Telegram. You're in my subscription. Here we go. Let's go. We're going to dive in. Looks good to me. Okay. So, we'll do something. Yeah, we'll do this. Okay. So let's say I think it's going to, or doesn't matter. Let's just go in. Okay, this is all from the phone. So let's say I'm going to buy. You just press buy. I've successfully bought one. Now what I can do is, see what I did there? Are you going through from the chart one or from the chart section? Go over to here where your positions are. I'm in my positions, and you can bring down the drop-down menu, and you're going to edit it. You're going to edit it, because most of this is automated. A TP means take profit, and SL is stop loss. So the price is right now $23.27. I'm going to set it to, this is just one stock, guys, okay? This is just one stock, and I'll put it in perspective. I'm going to set it to 23.50. I'm going to set my stop loss to, let's say, 2,300. Yeah, okay, 2,300. Save it. Okay, now that means here. That means when this stock price goes up to 23.50, it's going to automatically close position. Close meaning it's going to everybody uses the term sell, but that's not accurate. It's going to close and then leave me with profit. If it falls to 23, it's going to automatically close. And it does, and we put stop losses in place. They're very important. We put stop losses in place in case of us not knowing if it's going to continue to drop. We don't want to lose more or be stuck in a longer run, right? So it's going to automatically close. Most of this is automated. I'm not going to touch too much on the subscription because this is just strictly how-to, guys. Oh, sorry, correction. Yes, I am. Okay, so lots to cover. I'm going to try to keep this on track. So say this is all done. Say you're subscribed. Let's say you have the Real Trading account. Let's say you have the TradingView account. Okay. Now what I'm going to teach, this is what I do. Through my analysis, I'm going to show, or I'm going to tell you when to buy, when to get in a buy position, when to close position, where to set your stop loss. And for those who want to learn, I'm going to tell you why. There's a lot of things that can affect the price of any stock. For this example, gold, there is a technical analysis aspect to it. There is geopolitics to it. Okay, so I'm going to dumb this a little back a bit. Now, what I mean by that is everybody's using this marketplace around the world, correct? There are many things that can affect it. There is a FOMO aspect, which is fear of missing out. War affects it. Another country setting new sanctions on another country. For oil, it could be Russia blew up Ukraine's oil rig. You know, there are many things that will affect the price of a stock. Now, when it comes to trading, there's a certain mentality that it's going to take time, and it's going to take a lot of time to learn. You need a calm mentality about this because there's many people that give into panic, and the best thing you can do is stay calm. There is going to be times when you lose. You know, nothing is ever going to be 100%. And you need to accept the inevitability that you are going to eventually have a loss. Now, what I do for you is mitigate that possibility. Now, I can guarantee up to 85% accuracy, which is pretty good. That's pretty damn good. It's never going to be 100. It doesn't matter who you go to, who you talk to. No one will ever know for sure. Example. Let's bring it up. I think it was yesterday, maybe the day before. Now, I thought, let's bring it up. Now, I was in a gold position. Position means, I was in a gold long position. Long position means I was in a leveraging buy position. Short means a leveraging sell position. One is up, one is down. Simple as that. Okay, so I thought the other day that gold was going to keep rising. It was a miscalculation. So what happens? Gold fell, and it put my buy positions in the negative. And I was around maybe negative $300. But what you do not do is There is going to be times where you cut your losses, but as long as you stick to a certain mentality, you'll be fine, and stay calm and concise in this. So what you do is you can mitigate that loss by, so I have the example, I was down $200 or so. It kept dropping. I wait for the bottom. I buy more buy positions. So at this point down here last night, I'm around negative $300, right? But by this morning, 10 a.m. this morning, because I bought in again, because my positions are here and some around here, I came out of it with a positive $200. Now, I could have panicked. I could have freaked out. It will affect your mood. It will. But the best thing you can do is just recognize that what goes up must come down. What goes down must come up. There are a couple other things to take into account. Gold does very well when the economy is bad, and let's be real with each other. Do you see the economy doing any better, guys? No. I personally do not. So try to check your worries at the door, believe in the strategy, believe in the system, and it will prove out. Now, there is going to be some days where we don't trade at all, because the main point of this is to stay cash flow positive. Because of that, there are days or hours where no trading is going to be done at all, because I'm only ever going to put my money, your money, in a position where it's going to at least be 85% likely to succeed and prove out. Because of the uncertainty, and because that nothing will ever be 100% for sure, that's why many call it strategic gambling. Now, for those who are just genuinely taking in an interest and do genuinely want to learn the market, opposed to just having, of course, we all want the extra cash. We all want to get rich, and that is the plan, of course. However, for people that do want to learn it on their own time, I would recommend this. Join the Real World. They have an excellent stock trading course. I'll give you a run through real fast of what it's like. So go in here, you go into courses, and they're short. Essentially, they're just short little segment videos that might explain things a little better than me. I do think I dove into it with a little more detail for those that are really truly beginners. Absolutely recommend it, guys. Okay, last but not least, crypto. Here we go. Okay, so there's plenty of crypto traders out there. What is cryptocurrency? It's essentially just a digitalized stock. Stock is more of a physical nature. You buy it. You can have a share in a company. The company is real. It exists as a building, as a whatever it is, right? Crypto is not really that. It can be backed by companies and entities and organizations, but it's not essentially real. However, because you put money into something, it now is real, in a market nature. Now, cryptocurrency follows most of the stock market laws and the nature of the market. So I'll dive in real quick. And most of them are going to give you all the things necessary. Hold on. Okay, we'll go into markets. I'll do Bitcoin. Let's do Bitcoin. Boom, there it is. Excellent. So you go to Bitcoin, see this little thing, this little picture of candlesticks. You can dive in. It has all the same thing as all the other traders for stocks. Follows essentially the same nature. I'll make another video about manipulation and why I tend to stay away from cryptocurrency. There is a lot of money to be made, guys, but please, 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 please do not make the same mistake as many, many others. If you don't know what you're doing, just don't. It's just gambling at that point. If you want to go take all your money and throw it at a roulette table, go ahead. But without having the necessary knowledge, That is exactly what you are doing. And that goes for the stock market also. Same thing. You have to stick to the certain set of rules. Okay, so rule 1. Say I've purchased a stock. I've purchased a stock. It's going down. My dollar figure is going negative. Do you panic and close out? No, you do not do that. You hold out and you trust in your strategy. You trust in the signal that it will eventually prove out until it's at least cash positive, where you're in a positive, and then you can choose to close. But I recommend you stick it out and wait for the take profit that you've set it to. The market is always changing. That means your take profit levels are always changing. That means your stop loss might always be changing. I will guide you through that by sending you ready signals of whenever necessary. Of course, everybody has to sleep. That's okay. Okay, so another thing. There's another mentality that I want you guys to stray away from. Say, for the sake of conversation, that you're not following my rules. There is this mentality that people carried over from 4 years ago, from whenever there was the big old crypto boom and everybody was doing it. There's this thing that everybody does where they just buy it and they hold. You have to lose the investor mentality for trading, especially for gold and oil, because these stocks are very volatile. Volatility stands for change, a drastic change, and that's drastic change in price, in buying pressure and selling pressure. It's a very, very changing market. But because it's a very changing market, you can sometimes predict it and profit from it. Example, I was showing a friend. He wasn't really listening. He wasn't getting the yield that he was expecting at first. He had a minimum of 500 to start. I told him it would be slow at first. He wanted to stray off on his own. He was, for the first bit, he was following the rules, and he was cash positive. But he wasn't listening. He was holding trades longer than I told him when to close. He's like, "Oh no, I think it would go up. I think it would do this." Guys, I've been watching this type of stock for years. Even if it looks like it's going to be something, there is a lot to take into account. There's a lot of things that can happen with this. So you have to stick to a strategy and check greed at the door, because it will be your downfall. Example, again, let's say I bought in down here and I'm up $100 on however much I put in. There might be a little voice in you that says, "Oh, I'm going to hold it till 23.60, or I'm going to hold up here." However, even if there's a likelihood to that, we're going to get out and we're going to let it close at our take profits. Excuse me. Now, even if it passes and you've profited and you've gotten your take profits, you've made your $100 and it keeps going up, leave it at the door, turn it off, go on with your day. You've made your profit, leave it alone, and walk away from it, because that greed will be your downfall, and it always will bite you in the ass, And what can happen from a result of this would be, there's something that's called being liquidated, and essentially you go too negative or you've over leveraged too much, and essentially the trader will just close all your positions and you'll be left with very, very little dollars. It's not fun. I think everybody goes through it at least once, but this is a long time since it's happened to me, maybe 4 years ago. But we were all still learning in that time, right? I don't want you guys to go through that. If you stick to the certain set of rules and you stick to the signals and you stick to what I am telling you, this won't happen to you. But you have to follow the signals that I will provide you in the Telegram. Okay, I'm really trying to cover everything, guys. This video is going a little bit longer than I anticipated, but here we go. So I'm trying to dive into a little bit of how the mentality works and everything. Go say right now, I have some open trades because I do believe that because of the huge sell-off we had prior to this, that it's enough buying pressure to break to probably after a bounce to bring up to 2350. So I'm going to leave those there. I'm going to leave these here. But even though they're negative, you don't panic. You follow your strategy. And even if they go down to $100 negative each, you know, I would open different buy positions to counteract those negative effects. You know, but the thing that I'm getting at that you do not do is you are going to see red, you are going to see green. But you got to keep your mentality in check. You must keep a very calm attitude towards this. You know, because it will affect your mood, but we try to, you know, keep a calm attitude towards this. And as long as you stick to your strategy and stick to a plan, you will be profitable. Okay, guys, this video is getting too long. I'm trying to see if I've forgotten something. Any questions? DM me for details. Call me. Whatever it is, I will explain it as thoroughly as possible to help everybody understand. I'm not sure if it's going to let me post this. It's a little long. We're going to see what happens. I'll be sending this directly. Guys, I will see you. You've taken the first step and taken an interest in trading. Highly recommend it. Overall, just like every other video, guys. Good luck.